What is going on, y'all? This is going to be bootcamp day 2. I am going to be going over some basic things. And yeah, let's get into it. Let's not waste any time. So first off, what is a candlestick and what is a time frame? If you are just a fresh beginner, this is going to be new information. If you know pretty much anything about trading at all, this is going to be very easy stuff. But let's break it down because I want to pretend that everybody watching this knows nothing of what trading is or what I'm talking about. So first off, what is a candlestick? A candlestick is prices movement over a period of time. So that period of time, which is the other piece of the puzzle, is dependent on what time frame you're looking at price on. If I'm looking at price on the hourly time frame, that means each one of these candles here is going to represent 1 hour of price movement. If I'm looking at price on the 30-minute time frame, it splits each of those hourly candles into 2 basically, which allows you to zoom in on that candle a little bit. And then, I think I heard something. No, I guess I'm wrong. Anyway, sorry. When you look at the hourly time frame, you can see the broader picture. And when you look at the 30-minute time frame, you can see a slightly more zoomed in picture. When you look at the 15-minute time frame, it slightly zooms it in again. Now it breaks each of those 30-minute candles into 2 more candles, each one representing 15 minutes, and so on and so forth. I can go down to the 5-minute, which breaks that 3 even further, and then the 3, and then the 2, and then the 1, 30-second, 15-second, whatever your heart desires. You can also zoom out from the hourly time frame. You can go to the 4-hour, which is obviously 4 hours put into one candle. The daily, which is all of the candles of that day put into one candle, and you can get a zoomed in or a broadened view of the markets and what price is doing at any particular moment in time. This is a very important piece of information. It's very basic, but it is very important. I wouldn't be able to do any technical analysis whatsoever. Um, yeah, that's second one out. Yeah, I wouldn't be able to do any analysis whatsoever if I couldn't look at what's going on in each individual, moment in time, and see what's going on. So yeah, you use different time frames for different things. The important thing to note about time frames is higher time frames hold more power, and that will pretty much always hold true. There are rare occurrences where we will, not rare, it happens pretty relatively often, but it's a general rule of thumb that higher time frames hold more power. It's not like anything that I'm saying is 100% true and will happen 100% of the time. Because there's a bunch of different factors that go into the market, and some confluences get canceled out by others depending on certain things, and we're going to get into that in later videos. But the first really most basic thing to understand is how to look at what's going on. And like I just went over with time frames, it allows you to zoom in and out of the market. Now if you're looking at what price actually did during that period of time, that's a different story. So right now I am going to be looking at this on the hourly time frame. On the hourly time frame, we're going to look at these candles, or these 2 candles. Actually, let's go with these 2 candles because they look, I think I could do a better example with it. So when you're first looking at these candles, there's 2 things that you want to note. There are wicks, which is going to be, if I can click this part of the candle right here, this red part, that's not the body of it. This is called the body. This is called the, I probably should not do that. This is called the wick. This is called the body. The red part that's filled in is the body. So, like I said, when you look at these time frames, they represent an hour in price. This candle represented the hour of 10 a.m. This one starts at 11 a.m. and ends at 11:59 and 59 seconds, 0.99999, whatever. And then right at 12, or I'm sorry, yeah, right at 12 p.m., the new candle opens up. So when I'm looking at what price is doing, in terms of the body and the wick, the bodies are where price opened. So this candle opened right here, and then the candle wicked, because the wicks are where price went. The bodies are where price opened and closed. So the open of this candle is right here. This is where price, the hourly candle, maybe we went up here, maybe we went down here again, maybe we went down here, but we know that the candle opened here, and then all the movement that happened within it was represented by the wicks, but at the very end of it, we ended at this exact price right here. So at 10:59 and 59 seconds, 0.99999, whatever, right when that 10 a.m. candle fully closed and we fully represented that movement, we closed the candle here, and this is where price ended at, what? Closed $23,617 or points on the NASDAQ. That's where it closed. During all of that, it had a high of what? 23,626. And then we can go even further and we can say, hey, it had a low down here of 23,596 and 73 cents. And we can you can break down where price went throughout this candle by looking at the wicks. And you can say, hey, price during this time went up here, but it ended here. It's a very basic concept. I don't want to overcomplicate it at all. Like, if you look here, each of the candles connects because we went, let's say this candle closed here, meaning this hour was done. So we opened here. Maybe we went down a little bit. Maybe we went up a little bit. You can actually zoom in and see if you go to a different time frame. I can go, hey, 10 a.m., cool. This is where the candle started. So we started off by going up, and then we went down or whatever, and then we opened here, we closed here, we went all up all throughout this area. Then we closed. This candle opened here, then we went up to here, then we went down all the way down here. But in the end, we ended up closing right here at this price. Then the next candle opened right here. We started going, up, and then we went down, and then we ended bearish, meaning that's another important concept to understand. Bullish and bearish. What is bullish and bearish? Bullish, as in a bull, not bowl. I've had people mistake bull for bowl, and I'm not talking about bowls. I'm talking about like a bull in like, that a cowboy would ride or wrangle or I don't even know, whatever. So bullish. Okay, I don't know why it's doing that. Hold on. Oh, I don't know. Okay, cool. So bullish is prices going up, bearish is prices going down. There's other terminology for where price is going, but the main thing to understand is bullish and bearish. So if this candle closed bearish, it means that price started up here and price, it could have gone up, it could have gone down, it could have gone wherever, but price, once the candle closed, it is a bearish candle because we went down from the beginning to the end of that period of time. So within this frame of 30 minutes, whether we went up, down, great, cool. Maybe it started out being bullish because we were going up, and then it went down and it was bearish, and maybe it went up and it was bullish a little bit more, and then it ended finally at being a bearish candle. Next candle started here. It was a very, very strong bearish candle. We didn't even go up at all. We didn't want to go up whatsoever. We immediately just dropped down and plummeted all the way down to here, and we didn't even need to go up anymore because we were just so bearish at that point in time. So yeah, it's a very basic concept. The open is, when the candle starts, and it's represented by the body, the opening body. So like, let's say with a bullish candle, we opened right here, price went wherever, then we ended right here. Then when this candle ended and the next one started, this candle opened right here. So the next candle will open where the previous candle closed. It's don't overcomplicate any of this in your mind because it's not complicated. But like, I'm gonna try to do this, see if I can do this correctly here. Style, background, red, no, green, cool. Opacity, 100%. Great. So like, let's say I want you to imagine there's squiggly lines right here. Brush, cool. Cool, cool. Now let's say this is a candle. Now price from the previous candle, whatever it was, started here. It ended here. Whether it was a bearish candle, like if we want to make believe, say we were up here and then the candle closed down here, that would mean that this candle would open here, and that would mean it would close right here at this point. If it is a bearish candle, like let's say it was a back to back right here. I probably should have drawn this beforehand, but it's fine. I'll just waste a whole bunch of your time. I'm just kidding. I'm not wasting your time. It's important information. I just want to make sure it really gets driven into your brain. When you're looking at these two candles, this is going to be the, I should make this red. See, that's where I messed up. This candle, this bullish candle, opened down here because it went up. If it's a bullish candle, it started low and then it opened high, meaning that we started at this horizontal line. We went wherever we went during that. That's represented by the wick. So wherever we went during that period of time is represented by the wick. We had a high of up here. We had a low of down here, but in the end, we ended right here. The next candle starts where the previous candle closed. So if this candle ended right here, the next candle, whether it's bullish or bearish, will start right here. If it's a bullish candle, and that's perfectly works too. Like as you can see over here, this candle closed bullish, the next one opened bullish, and then it kept going. It closed bullish again. Next one did the same thing, and then the next one went from being, the old candle was bullish, the new one bearish. Then this candle opened bearish, and it's really not a hard concept. It's ask any questions if you have any questions in the comments, and I'd be more than willing to answer it. I hope I'm clarifying this correctly. But more or less, the wicks are represented or are representing where price went during said period of time. The bodies are representing where the candle opened and where the candle ended. So where it started and where it ended. Bodies are the start to the end. The wicks are just any movement in between that. It's like squiggly hair. Okay. But yeah, so that's what a candle is. Like I said, these candles can represent 1 minute in time. They can represent 5. They can represent a year, a month, a week, any of the time frames in between. Um, they have literally time frames down to like the 1 second if you really want it, or the 10, or the 5, or the 15, or the obviously, like I said, the 2, the 1 hour, the 45 minute, whatever. But they allow us as traders to get a view into what price is doing and where it's going and where price opened and where price closed, and we use that to break down the charts. We use it for a lot of other things, which I'm going to get into in later videos, but I don't want to overcomplicate, especially a kind of beginner video. So that's going to be all for this video. If you have any questions, like I said, feel free to comment and I'll answer them. I'm pretty sure I clarified it pretty well. But yeah, so remember, bullish is up, bearish is down. Candle will open here if it's a bullish candle. If it's a bullish candle, that's another thing, I guess, if you don't already kind of grasp it from what I'm saying. A bullish candle will open low and close high, and a bearish candle will open high and close low. And that is true for all bearish and all bullish candles. I'll write that down real quick just before I end the video. And there you are. So feel free to write all this down. I remember I wrote a whole bunch of stuff down, whatever helped me, especially if you have a journal, it will really help you to be able to look over and take notes on. So yeah, bearish is open, high, low, close. Bullish is open, low, close, high. Bullish means going up, bearish means going down, and a candlestick is a representation of where price went over a period of time. So I'm going to end the video here, and I'm going to try to pump out another video or two before the night is done.